Good morning, everyone. I am Helen Miller. I'm a Deputy Director at the IFS, and I'm very pleased to welcome you to our event today. You are going to be presented with the analysis from our inaugural Scottish budget report. You're going to first hear from David Phillips, who is an Associate Director at the IFS and who leads this programme of work. He's going to kick you off by setting out the outlook for both overall and local government funding and spending. You're then going to hear from Bea Borloo, who will tell you more about income tax revenue performance, and then from Tom Wernham, who is going to talk you through the distributional impacts of tax and benefit reforms. So lots of interesting stuff for you this morning. Before we dive straight in, there's two things I wanted to highlight. The first is that on Tuesday night, the Scottish Government announced additional funding for Scottish councils for teachers' pay. That was probably somewhat overshadowed by other political announcements in Scotland. But we have done our best to incorporate those last minute changes, and David will highlight when and how they might affect the analysis. The second thing to say is that there will be time for questions at the end. So please do put your questions into Slido and vote for the ones that you would most like to see the answers to. And I will try to put as many of those to the panel as I can at the end. But for now, let's get going, and I will hand over to David.
Thanks, Helen, and good morning, everyone. So in this first presentation, I'll provide an overview of our analysis of the outlook for overall funding covered in Chapter 2 of our report, and recent trends and the outlook for local government specifically covered in Chapter 4 of our report. Now, as Helen said, on Tuesday evening, the Scottish Government announced it was going to provide councils with additional funding for teachers' pay in 22-23, the current financial year, and 23-24, the next financial year. Now, some news outlets like the BBC report there is also extra funding to pay for awards for other council staff on its way too. Now, unfortunately, the Scottish Government hasn't said where it has found this money after just a week earlier saying it had fully allocated its available funding and there was no more left. And it also hasn't said how this money will be spread across the 2 years. So, of course, this poses a bit of a difficulty for giving a fully up-to-date picture of the short-term funding outlook. The starting point for my presentation will be the published budget figures, which have been before these pay announcements, but I will show how different scenarios of where this funding has come from may affect some of the key numbers. Okay, so let's start on the overall funding outlook. The overall budget for non-benefit spending, so that's spending for public services like the health service, councils, police, universities, and so on. This overall budget for non-benefit spending in the coming financial year, 23-24, as set out in the current version of the budget bill, is about £1.5 billion higher than was planned in the resource spending review last May. This reflects both additional funding from the UK government and a substantial improvement in the net contribution from Scotland's devolved taxes. So back in May, the resource spending review planned for about £38.4 billion in day-to-day spending on things other than devolved benefits in Scotland in the coming year. Since then, the UK government has announced top-ups to its spending plans that it set out in the spending review in 2021, which generates about £1.1 billion for the Scottish Government via the Barnett formula. Now, back in the resource spending review, the Scottish Government had already assumed it would get around £250 million extra, so the net effect is to boost the available funding by just over £800 million. Increases in the Scottish Fiscal Commission's forecast for tax revenues relative to those in the rest of the UK since last May also generate around £800 million extra for the Scottish Government budget. Now, only a relatively small part of this is due to the new tax measures announced in the budget. Most of it relates to the SFC now thinking that the underlying income tax base in Scotland will grow faster than the OBR has forecast for the rest of the UK. That's a big change from what it previously was thinking. And Bea and Tom will talk more about income tax later in this event. There have also been a number of other changes boosting funding, and reducing funding for the Scottish Government in 23-24 compared to the plans penciled in last May. But the net effect is that the Scottish budget bill shows an increase of about £1.5 billion compared to those initial plans, from about £38.4 billion to £39.9 billion. Now, it's unclear exactly how the latest announcements on teachers' pay would affect this. If the money has been found by reallocating within budgets, that wouldn't affect the totals I've shown here. But if it is new money, or it's money being carried forward from the current financial year, that could mean that the sort of top up to the initial plans for next year's budget is a little bit bigger than this £1.5 billion that I've shown here. Although it is worth noting that inflation has been higher than expected last May and is expected to persist for longer, so that will eat into this increase. It is, I think, clear that the budget for 23-24 is a little bit better than we would have thought back last May, but maybe not quite so much better as this headline number suggests, given that inflation is now going to be higher. Now, this top-up spending plans in 23-24 means that nearly all areas of spending will increase relative to what was initially planned to be spent this year. And again, that's a big change since the resource spending review last May, when most areas of spending were set to be reduced in real terms in the coming year. So, for example, the budget bill shows health and social care spending set to increase by 2.9% versus just 0.2% that was planned in the resource spending review. The budget bill shows core local government allocation set to fall by 0.2%, but this is a substantial improvement from the 2.4% cuts penciled in the resource spending review. And the latest announcement on teachers' pay mean that it is almost certainly the case that the core local government budget is now actually set to rise in real terms. I'll discuss this more a bit later. And other areas of public service spending are also set to grow rather than be reduced. All this means that overall non-benefit spending, so spending mostly on public services, is set to be about 1.6% higher in 23-24 than was initially budgeted for in the current year, 22-23. And that compares to about a 1% cut that was planned back in the spending review. By far, the biggest increases are planned for social security spending, which is forecast to increase by over a quarter in real terms in the coming year. This partly reflects the impact of particularly high inflation in 22, because benefits are increased by inflation in the prior September. So the really high inflation last September will mean a big increase in benefits this year. But it also reflects Scottish Government reforms, such as increases in the Scottish Child Payment and the rollout of disability benefit reforms, which Tom will discuss more later. Those are both pushing up social security spending. Now, I've mentioned a few times here that this is comparing things to the initial budget set out for 22. The comparison the Scottish Government makes is to compare the budget for 23 with the initial budget for 2022. And it's long done this sort of budget to budget comparison when discussing how funding is changing for different services. And the Scottish Government argues that this is the most consistent way of doing things, as things may change during the course of the year. They've changed during the course of this year. They may also change during the course of the coming year. So it's best to compare the start dates rather than the latest positions. Now, it is true that things may change during the course of the year, but given they have been very substantial in-year top-ups to budgets in the current financial year 22-23, and the government has said it has allocated all funding currently available for the coming year, in our view, it makes sense to compare the latest position for this year to what's budgeted for next year. And that gives us the best sense of our current expectations of how the amount of funding available will change compared to what is actually being spent this year. And this is what the Scottish Fiscal Commission reports in its analysis, and this shows a rather different picture. So as I said, the Scottish Government's comparison to the budget for 23-24 as set out in the current version of the bill with the initial budget for the current year shows an increase of around 1.6% in real terms for non-benefit spending. But if you compare the budget for 23-24 as set out in the bill with the latest position for 22-23, then funding for non-benefit spending would actually be set to fall by 1.6% in real terms in the coming year. Now, some of the top-ups made available in the current financial year have been used explicitly for one-off policies like the council tax rebates that many households have got this year. Now, stripping these out, it is still the case, though, the budget bill shows funding for non-benefit spending set to fall by about 0.8% in 23-24. Now, it's not fully clear how the latest announcements on teachers and council pay affect this. If these are to be funded from reallocating funding from other services, obviously it makes no difference to the overall budget. If it's all new funding, the year-on-year adjusted cut may be closer to 0.3% because there'll be more money in 23-24 than is set out in the current version of the budget bill. If it's being funded by underspends in 22-23, because that depresses spending in that baseline year, adjusted non-benefit spending could actually increase a little bit in real terms year on year. At this stage, it's uncertain, but hopefully you'll find out more information in the next week or so. Now, turning to the median term, as in 23-24, funding is set to be higher than projected back in last May's resource spending review. But official projections still show it to be lower in 2027-28 than the current financial year, 22-23. So both of these points are illustrated on this chart, which shows projections of funding for non-benefit spending over time, with the amount expected to be available in the current financial year, 22-23, as of the resource spending review in May, that is set to be 100 on this chart. The red line shows projections as of the budget bill are higher than the pink line, which shows the projections as of the resource spending review, both over the next 2 years and perhaps a bit less certain because the UK government hasn't had its spending review yet for this period over the next 3 years too. Now, this partly reflects additional funding provided by the UK government over the next 2 years, although the UK government has penciled in a slowdown in spending growth from 25-26 onwards. It also partly reflects the aforementioned expected improvements in Scotland's devolved taxes, which the Scottish Fiscal Commission assumes don't just affect 23-24, but will continue to build up over time. But even so, with this improvement, you can see that as of the latest projections published alongside the budget, funding for non-benefit spending is still set to be about 2% lower in 27-28 than in the current financial year, 22-23. Now, these are uncertain projections, of course. On the one hand, as I mentioned, the projections build in Scottish Fiscal Commission forecasts of an improved tax performance relative to the rest of the UK. If that doesn't come to pass, the reduction in funding over the next few years would be even greater. On the other hand, the Scottish Government has been deliberately cautious about how much funding it will receive from the UK Government, given the plans penciled in by the UK Government. We think that funding in 2027 might actually be about 1% lower, rather than 2% lower, as assumed by the Scottish Government. And given that the spending restraint penciled in by the UK Government would likely to be hard to deliver at a UK-wide level, we think these plans may be topped up in coming fiscal events. So some factors might mean that the outcome in the future is a bit more pessimistic than the official projections, but other things mean that there could be also improvements compared to these projections. Now, on the issue on teachers' pay, Because the recent announcements relate to this year and the coming financial year only, it has much less of an impact on the medium-term outlook. Although to the extent that funding in the coming year is higher than set out in the current version of the budget bill, the year-on-year cuts in the subsequent year, 2024-25, they would be a bit bigger than the budget bill suggests they would. In any case, whatever the exact figures are here, this funding outlook means that unless UK government was to very substantially top up its spending plans, or the Scottish government was to further significantly increase its own devolved tax rates, well, it will face very difficult trade-offs in future budgets when it allocates funding between different service areas. So, for example, prioritising health and net zero and transport, as in 2023-24, would require some very difficult choices for other areas. So this chart, for example, shows how prioritising health and net zero, big ticket items in this year's budget, would affect the amount available for other service areas. So, for example, increasing spending on these services in line with what was planned in the resource spending review last May would require a cut to other spending on other services of around 6% by 2027-28. But continuing to increase spending on health and the net zero portfolios at the rate they were increased in the 23 budget would require a cut of around 13% in other services by 2027-28. Of course, cuts on that scale will be very difficult to deliver. And I think that means that more probably what would happen is that increases in health and net zero will have to slow down in future years. And that might make it difficult to get the NHS back on track and to meet climate change goals. Now, one area of the Scottish Government's budget that has generated a lot of debate in recent weeks, of course, is funding for local government, which in Scotland includes schools. We look at this in some depth in Chapter 4 of our report, and it's notable when we look backwards that Scottish council funding was cut by less than English council's funding during the 2010s. Now, this is probably because the Scottish Government had to make smaller cuts overall because of the way the Barnett formula operated during this period. And it also offered slightly less protection to the NHS spending than in England. So cuts to other areas like local government could be smaller. The biggest beneficiary of this less austere picture for local government in the 2010s was funding for schools and early years childcare and education. This actually increased substantially in Scotland during the 2010s. And for example, by 2021-22, spending per pupil aged 3 to 18 was around a quarter higher than in England, up from just 4% higher in 2009-10. That's a big change. And of course, the Scottish Government will be hoping this starts to translate into improvements in educational performance soon, because there have been some concerns about that in Scotland in recent years. Spending on social care also increased during the 2010s, but spending on most other services provided by councils fell by over a quarter in real terms during the decade. 2020 and 2021 saw councils in both Scotland and England receive large amounts of funding to help them meet the financial and wider challenges associated with the COVID pandemic, although in both cases, significant parts of funding were paid into reserves. It seems that not all the funding was used initially, and that might provide a little bit of a cushion for the coming difficult years ahead, although of course reserves can only be used once. And when we look ahead, the outlook for Scottish councils is that actually it could be tougher in the next few years than for English councils, who are set to see quite a sizable funding boost, actually. So alongside the budget, the Scottish Government has presented figures showing funding for councils increasing in real terms in the coming year compared to the current financial year. However, these figures don't account for in-year top-ups made to the initial budgets for this year, which I talked about earlier. And they also don't adjust for new responsibilities councils have to provide for from within the funding being provided. So, for example, they have to fund rates reliefs for empty properties going forwards. Now, adjusting for this, we estimate that if council tax was frozen, council funding would fall by around 1% in real terms in the coming year based on the plans set out in the budget. Even with 5% increases in council tax, equivalent to just under £70 per year to the average Band D property, funding would still fall slightly in 2023 compared to 2022. And remember, those council tax increases would come on top of the ending of the £150 rebate most households received in the current financial year. So that would mean, a Band D property seeing an increase of £220 on average in the coming year. Now, the announcements made on funding for teachers' pay are likely to change things somewhat. Assuming that half of that funding is for the current year and the other half is for the year we're about to enter, and that all of the extra funding for council staff that BBC reports has been made available, that is for the coming year, then with 5% council tax increases, funding would likely slightly increase in real terms in the coming financial year by about 0.5% to 1%. Now, hopefully things will be confirmed soon so councils can budget effectively. The outlook for 2024-2025 is more uncertain and will depend on how the Scottish Government allocates its budget between services. In turn, that will be affected by how much it chooses to prioritise other areas of spending like health and net zero. But this chart here shows that even with council tax rises of 5%, council funding in 2024-25 will be over 4% lower in real terms than in the current year if the Scottish Government continues to increase health and net zero spending at the same rate as in the budget, and funding for councils is cut in line with the average for all other services. So, as I said, the outlook for 24-25 is currently more uncertain, but the cuts could be substantial if there are prioritizations of other areas of the budget in line with what's happened in this year's budget. As I said, the contrast with England is really quite stark. This chart shows that even if council tax was frozen in cash terms, funding for English councils and schools would be around 3% higher in the coming year than it was this year, and over 5% higher in 24-25. And if council tax was increased by 5% each year, the increases would be more like 4.5% and 8% by these 2 years. It's quite a different picture in England for council funding. Now, just as for the Scottish Government, of course, the greater the extent to which councils prioritise certain services they deliver, the bigger the cuts they have to make to other services. So obviously funding for schools has been particularly contentious in recent weeks, with the Scottish Government threatening to cut funding further if councils do not protect teacher numbers. Protecting school spending from other cuts will mean big cuts to other services that often saw the biggest cuts in the 2010s, things like housing, libraries, leisure centres, economic development, and so on. And around each 1% increase in spending for schools means around 1% less for other services that councils provide. Okay, so to summarise, the Scottish Government faces short, medium and long-run budgetary challenges. The 2023 budget is larger than was initially expected, but is currently, at least according to the official bill, set to see a cut in non-benefit spending. We'll see shortly, hopefully, if the announcement on teachers' pay changes that a little bit. But even if it does, it'll still be a very tight picture. Funding for non-benefit spending is still projected to be lower in 2027 than in 2022. And I haven't mentioned this because of time in today's presentation, but there's also a long-term squeeze relative to funding in England as a result of the way the Barnett formula works. Local government funding is set to be squeezed while it rises in England, at least partially reversing the trends that were seen in the 2010s. And finally, remember that the budget plans and the official medium-term projections are predicated on an improvement in Scotland's tax revenue performance relative to the rest of the UK. B will now say a little bit more about tax revenue performance since devolution and the forecast improvements over the next couple of years.
Thanks very much, David. I'll now be talking about income tax performance in Scotland since devolution. So in 2017 to 18, power to set the rates and bands of income tax was devolved to the Scottish Government. And at the same time, the block grant funding that Scotland receives was adjusted to compensate for the fact that Scotland was now collecting its own income tax revenue. This was initially set equal to an estimate of revenue collected, devolved revenue collected, but now grows in line with percentage growth in income tax revenues per person in the rest of the UK and the change in the Scottish population. And this implies that the net position, which is the difference between the revenues collected by the Scottish Government and the block grant adjustment subtracted from block grant funding, will be positive when revenues per person grow more quickly in Scotland than in the rest of the UK. And it will be negative when revenues per person will grow less quickly. And it's worth noting that this is all ultimately based on outturns, but initially based on OBR and SFC forecasts. So that creates a bit more risk around the whole process that I'll come back to later. Since income tax was devolved, the Scottish Government has made revenue rating changes to income tax policy. That's meant a reduction in the higher rate tax threshold relative to the rest of the UK, the introduction of a 5-band system of income tax, and an increase in the higher and additional rate of tax to 41% and 46% respectively. However, slow growth in the underlying tax base in Scotland has placed downwards pressure on the net position, the difference between revenues and the block grant adjustments. So the Scottish Fiscal Commission estimate that between 2017 to 18 and 2022 to 23, the impact of the policy changes made by the Scottish Government alone would be to really push up the net position, meaning that Scotland was really benefiting in a budget sense from the devolution of income tax. As shown in 2022 to 23, the effective tax policy is estimated to be £852 million positive for the net position. However, the net position in reality was much lower than that, with in the final year covered, the net income tax position being negative, meaning that Scotland's actually losing out from the devolution of income tax. To some extent, that will be the result of behavioural responses to the revenue-raising tax policy in Scotland, which weren't accounted for by the Scottish Fiscal Commission's forecasts. But more important are other underlying differences in economic performance which have acted to push down the net position in Scotland. So employment in Scotland has grown less quickly than in the rest of the UK, reducing revenues per person. And that's largely been a result of declining age-specific participation rates, especially among 35 to 49-year-olds. Scottish earnings growth has also been weaker in the rest of the UK since devolution, with earnings growing 2.6 percentage points more in the rest of the UK compared to Scotland between 2016 to 17 and 2021 to 22. As late as May 2022, this slow growth in the underlying tax base was expected to continue to 2026 to 27, meaning that the net position was continued to be very low and negative in most years considered. However, in December 2022, forecasted revenues were revised upwards by the Scottish Fiscal Commission, and block grant adjustment forecasts were revised downwards. So here you can see the forecast for the net position in May 2022. As you can see, over the whole period covered, it's almost universally negative, with only a short tick upwards in 2024 to 25. But in December 2022, the forecast was significantly more positive in all years covered, with a revision of more than £1 billion upwards in the final year covered by these forecasts, 2026 to 27. It is worth noting that the estimate of the difference in policy-only terms has continued to be higher, meaning that there's still some underlying disappointing tax-based performance in Scotland. To some small extent, this will be the result of changes in income tax announced in the December 2022 Scottish budget, which will have made the forecasts more generous compared to the May forecasts. But to a larger extent, this is going to be the result of changes in employment forecasts. So the OBR has revised downwards its expectations of employment growth in the rest of the UK, while the Scottish Fiscal Commission hasn't done the same. And the Scottish Fiscal Commission also expects that earnings are going to grow faster now in Scotland than in the rest of the UK. To some extent, this all reflects Scotland's specific factors that have changed. So higher energy prices would be expected to prop up the oil and gas sector, which will support income tax revenues in North East Scotland in particular. But this could also reflect different judgments about the UK as a whole, though the Scottish Fiscal Commission just being more optimistic about underlying factors to do with revenue growth in general. And this exposes Scotland to some significant downside risk. So if the optimism of the Scottish Fiscal Commission is right, then the OBR will have been too pessimistic about the rest of the UK, and the block grant adjustment will be higher. If the Scottish Fiscal Commission's optimism is wrong, then revenues collected in Scotland will be lower. And in both of these cases, the net position will be lower than currently forecast. So revenues have been disappointing since the devolution of income tax, and that's despite revenue-raising policy choices from the Scottish Government. It's largely a result of weaker tax-based growth in Scotland from both slower employment and slower earnings growth. Forecasts in December 2022 for future Scottish revenues from income tax look more promising. But as I've said, there's some downside risk associated with these forecasts. I'll now pass over to Tom Wenham.
Thank you very much, Bea. So now I'm going to focus in on the impact of Scottish tax and benefit reforms on the disposable incomes of Scottish households, both looking at reforms that happened recently in the budget and reforms that happened previously to that. So just to give a bit of context, many powers over income tax and benefits have been devolved to Scotland. Bea's just told you about the income tax powers, which relate to the tax charged on non-savings, non-dividend income only. And as a result of the changes that Scotland has made to income tax, the majority of earners will be paying more income tax than they would under the system in the rest of the UK. Only those earning below about £28,000 will pay less, so comparatively lower earners. And then on the benefits side, various powers have been devolved since 2018 to modify and even create new benefits, and I'm going to talk about a few of those in this presentation. So a key example is benefits for children. We've got the Best Start grants, replacing Sure Start maternity grants, and the Scottish Child Payment, a brand new benefit which targets low-income children. And I'm going to talk about how these are quite substantial boosts to the incomes of poorer families with children. We also have a few other smaller changes, such as mitigation of the benefits cap and under occupancy charge, and a supplement to the carer's allowance. And then an area I'm going to talk about more specifically later in the presentation is the introduction of adult disability payment to replace personal independence payments. Now, this new devolved benefit is set to actually increase spending on disability benefits by the Scottish Government, and that's because of a different assessment process, which means that it's potentially going to be less intensive, which might encourage take-up. And it might mean that claims, once they are successfully made, actually last for longer. So there could be more spending on that, even though eligibility and headline amounts are the same. And just to focus specifically on what's been introduced since the Scottish budget, well, the Scottish budget of December and also other changes made over the last fiscal year have really accelerated the divergence between Scotland and the rest of the UK in terms of the tax and benefit system, personal tax and benefit system. So on the side of income tax, well, as a result of December's Scottish budget for April 2023, the higher and additional rates will be raised by 1 percentage point to 42% and 47% respectively. They were already higher than the rest of the UK even before the budget. The additional rate threshold will be cut to £125,140 in line with the rest of the UK. And the basic, intermediate and higher rate thresholds will be frozen, which is also broadly in line with UK policy. And then on the benefits side, well, last November, the amount of the Scottish Child Payment was raised from £20 to £25 a week, and eligibility was increased to under 16s in low income families. So let's now have a look at the impacts, not just of these recent changes, but of all the various changes that have been made to income tax and the benefit system in Scotland relative to England and Wales. So what I'm going to do is plot the cash impact of these changes on households disposable incomes on average, both overall and by income decile, so from the poorest 10% of households to the richest 10%. And what we can see, if I do that, is that relative to what their incomes would be in England and Wales, on average, households will have just over £200 less income, as the Scottish Government uses its powers to raise more revenues to fund public spending. But I think the most striking feature of this figure is actually how redistributive the changes have been. So the poorest 30% will be between £600 and £700 a year better off, as you can see on the left, whereas the richest tenth will actually be £2,600 a year worse off, as they are particularly exposed to the increases to income tax. And to show just how progressive this is, it's useful to look at these changes as a proportion of what household incomes would be under the system in England and Wales. And what we can see is that there are significant boosts to incomes at the bottom of 4.6% for the poorest tenth, and reductions in income towards the top of about 2% on average for the richest tenth of people. Now, it's income tax changes that are driving the lower income, so richer households, but for poorer households, it's actually changes to benefits, and in particular, those changes to benefits for families with children that I discussed earlier. So what I'm now going to do is repeat this analysis, but just looking at households with children. So if I bring that up here and note the scale has changed, actually we can see that for poorer households with children, they are seeing quite significant boost to their income of around £2,000 per year on average for the poorest 30%. And that is an increase of almost, well, it's around 11% for the poorest tenth of households. So these are really significant changes for households with children. And indeed, for some of the lowest income households, the gains will be even greater than shown on this chart. For example, for an out of work lone parent with 2 children, the increases to the Scottish child payment alone will mean a 19% boost to their disposable income. So having looked at these overall changes, I'm now going to hone in specifically on the adult disability payment. And as a reminder, the adult disability payment is going to mean more spending on disability benefits because, well, we expect, although it's uncertain, because of less intensive assessment processes and longer claim durations expected. So some useful context for this is actually to look at how the monthly rate of new claims for disability benefits has been changing over time. So what I'm going to do is plot monthly new awards over time, indexed to February 2020. And what we can see is that since before the pandemic, new claims have increased really quite substantially by 90% compared to the pre-pandemic average. And there are various factors driving this. But this is a similar story also to what's happening in England and Wales, and means that even in the absence of any reforms, there's already significant pressure upwards on the amount of disability benefit spending that's going to be going forwards. But with this context in mind, let's think specifically about how reforms which increase spending on disability benefits are going to affect the progressivity of the tax and benefit system. So to do that, what I'm going to do is show you where disability benefit claimants tend to lie in the distribution of living standards. So what I'm now going to do is plot the rates of people who are not disabled but receiving either disability living allowance or PIP, because this is from older data, and disabled but not receiving those benefits. And I'm going to do that overall and for different deciles of something called an index of material deprivation, which captures people who are deprived according to a range of measures, such as being unable to afford to heat their homes, or have a warm winter coat, or eat a healthy diet, and so on. And what we can see if I bring up this graph is that really disabled people in general, and also people who are receiving disability benefits, are really concentrated, particularly in this group who are the 10% most deprived on this measure. So we can see that over half of this group are disabled and 17% are on disability benefits. So if we see the adult disability payment leading to more spending, then this is also going to likely to be targeted at the households with the lowest living standards. Now, in case anyone's wondering why I've switched to using this material deprivation index rather than incomes as a proxy for living standards, as I did earlier, well, that's because when talking about people who are disabled in particular, incomes are not a very good way of capturing who has low living standards. And that's because given that lots of disabled people do receive disability benefits, which push up their income, you'll often find disability benefit recipients in the middle of the income distribution. But it doesn't seem reasonable to infer that they are middling in terms of living standards, because the purpose of those disability benefits is meant to be to compensate for higher costs of living, of attaining a given standard of living than other people face. So it seems more effective to look at the index of material deprivation when specifically looking at this group. So just to wrap up, Scotland's income tax and benefit system has become much more progressive than that of England and Wales, and that's been accelerated by the recent budget. And poorer households with children are especially likely to benefit from the changes. But on average, households have been left with a little less disposable income as the Scottish Government seeks to raise more revenue. Now, as I said, recent changes have increased divergence between Scotland and the rest of Great Britain. And the new adult disability payment coming in over the next few years is likely to increase progressivity, but add to costs for government at a time when disability benefit spending is already set to rise. So thank you very much. That's all from me, and I will hand back to Helen.
Wonderful. Thank you to Tom B and David for all that interesting material. Now, there are already lots of questions coming in on Slido and lots of very specific questions about some of the details going on here. So we'll get to those. I want to start though with a sort of big picture question, which I think relates a bit to what Rory Morrison is asking, which is what are the plausible options the Scottish Government has in the short run if it wanted to raise more revenue to mitigate the negative fiscal outlook? And I'm going to ask this to you, David. So that, but also more broadly, the government is making increasingly different choices to the rest of the UK. There's a different policy model it's pursuing. If it keeps doing this, both kind of in the short run and the longer term, what are the kind of risks it's setting itself up for, and how can it mitigate some of those?
So yeah, kind of addressing the second part of your question first, I think this budget really does continue what you might kind of call a Scottish policy model that's developed over the last few years. There have been further moves towards a more redistributive tax and benefit system, higher taxes on higher earners to fund more generous benefits, especially for low-income families with children. I think there's a kind of question about whether this will continue or not. And this comes back to kind of Rory's question. So I think one of the things we kind of look at in the report is sort of, we discuss a bit the behavioural responses to tax policy changes. And the SFC, for example, thinks that of the approximately £35 million raised from raising the additional rate of income tax from 46 to 47p, over £30 million, over 90%, will be offset by behavioural response. So it will only raise about £3 million. Now, that doesn't mean you can't raise more from higher income people, but it might suggest that maybe income tax is not always the only place to look for that. Maybe other alternatives. So, for example, council tax could be an alternative. Scotland did make some reforms in 2017. They were a little bit timid, though, if I'm honest. And if it did want to potentially raise more revenues, certainly make it more progressive and more up to date, it could revalue and reform council tax. And we hope to do some work looking at that in the near future. I think also kind of at the big picture, this budget, and we didn't really talk about this, it's sort of another aspect of the sort of Scottish policy model is universal public services, more free stuff for everyone, basically. So already in Scotland, there's things like free personal care, free tuition, free prescriptions, and so on. The budget has seen sort of further moves in that direction with a further rollout of free school meals to all primary school children. Now, these things are largely funded not by higher taxes in Scotland. Those higher taxes in Scotland, as I said so far, really have been offset by lower tax base growth. And even going forward, so those higher taxes will just about cover the higher benefits, but not really pay for any additional public service spending. Instead, this public service sort of greater generosity is largely a result of quite high funding from the UK government. But I think there's a question about the sustainability of this in the medium to longer term. We saw that over the next few years, the Scottish budget is set to fall on current projections. That's a time when demand for health services is rising, demand for social services is rising. Will it be possible to meet those demands and sustain all of these sort of things that go above and beyond what's available in the rest of the UK? In the longer term, I said the Barnett formula basically squeezes funding in Scotland relative to England. At the moment, Scotland gets about maybe 126, 127% of the English spending per person. We think that will fall to less than 120%, within the next 10 or so years, and then maybe down to 115%. So still higher than the rest of the UK, but not so much higher that it's been used to. So I think there potentially are some risks to this model. One option would be to pay it back. Another option would be to raise taxes substantially in Scotland. I think there's been a lot of discussion recently about, independence is the option. In the long run, actually, it's not clear what the impact of independence would be on the economy. There's risks it could be, lack of access to the UK market or less access to the UK market. The phasing out of these transfers to Scotland might even in the long run mean it's bad. But also it could be good economically if the Scottish government could have a range of better policies. But I think in the short term, what is clear is that in the short term, the sort of public finance situation probably wouldn't be helped by independence. So I think there's no easy answers in the short to medium term, at least, about how to address this. I think either there would need to be some paring back of this model or substantially higher taxes in Scotland.
Great, thank you, David. So I guess continuing the sort of theme of these risks, I'm going to go to our top question. I'm going to send this to you, B. So the most voted question is, why has earnings growth been slower in Scotland than the rest of the UK? Which I think relates to a question further down as to why Scotland is losing from income tax devolution. So perhaps you could say a bit about why earnings growth, and I think employment growth, you said too, is doing less well in Scotland, and how that's feeding through into these income tax revenues.
So there's kind of two main factors that can explain a lot of the weaker performance of Scottish earnings compared to the rest of the UK since devolution. So the first is relatively strong growth in London and the southeast and the east of England since devolution, and that's largely been driven by strong earnings growth in the finance and insurance sector in particular. And because many of the people working in this sector in London are highly paid and subject to a marginal rate of income tax, this has an especially strong effect on income tax revenues in the rest of the UK, which then feeds through to the block grant adjustment. And then also in Scotland, the performance of the oil and gas sectors has been deteriorating from 2016, 15-16 onwards, kind of linked to falls in oil and gas prices in this period. And that's especially affected northeast Scotland and has meant that revenues collected in Scotland are lower. And again, that means that there's this relative difference. And in terms of employment, as I said, Scotland has seen slower employment growth in terms of falls in economic participation rates within age groups in Scotland compared to the rest of the UK. And all of these things have acted to depress the tax base in Scotland relative to the rest of the UK. I mean that the net position, the difference between revenues in Scotland and the adjustment that they receive is lower and negative.
And if I might come in there very quickly, I think if you compare, take out the northeast of Scotland, take out London and the southeast of England, and then performance in terms of earnings between sort of the rest of Scotland and then the rest of England, if you like, has actually been quite close. It really is these sort of the northeast Scotland, southeast England that sort of drives the overall picture. I think there's a kind of question, I mean, maybe we can say more about this, about will this start to reverse? The SFC has kind of indicated that it thinks it might start to reverse a little bit with the sort of rebound in oil prices, although that does seem to have already started to ebb away a little bit. And also a slowdown in financial services in London. I think the really big question we're not sure about is the employment one. Why is employment fallen in Scotland relative to the rest of the UK? It's not because of the aging population, really. It's within age groups. Now, some of this could again be the northeast of Scotland, but it seems to be a bit more widespread than that. I think that is kind of a key sort of policy question, because if that was to continue, that would, even if earnings improve, that would, not only affect Scottish tax revenues, but affect the ability to, have people to work in the public sector and, other parts of the economy.
Yeah, and just to sort of reiterate what you said, I think that's fascinating, David. That we're looking at these big picture Scottish fiscal numbers. A lot of that is driven by income tax, and in turn, a lot of that is driven by just two sectors, just by the performance of the finance in the southeast and the performance of oil and gas in Scotland. It's kind of impressive that so much of this discussion is really being driven by when you drill down by just these two sectors. I think that's kind of fascinating. Let's move to the next question. Again, I'll take the one at the top. So this question is, the issue with teachers' pay and the income tax position is really complex. Is there a way to make the budget less opaque? And let me kind of add to that. I mean, one of the things I was surprised about when I first saw these numbers is the extent to which these in-year payments are, where your revenue spends are mattering, and that people are comparing to the old budget, but that's kind of misleading. Is there enough transparency around this process? Perhaps I'll give that to you, David.
Yeah, I think that's a really good question, actually. I might kind of start with, I guess, some of the issues more generally before coming on to the teachers' pay, if I might, so I can think a little bit more about that one as I kind of go along. So I think there's a few issues in terms of transparency with the Scottish Government's budget. I mean, one issue that you didn't touch upon, which I sort of noticed as I was putting together our analysis, is that there's quite a lot of double counting of some of the funding increases. So, for example, funding for some areas of social care, for example, to pay higher wages for social care workers, they've been counted both in the 1 billion for health and social care the Scottish Government has trumpeted, but also in the 570 million pounds for councils that was there. Now, I don't think the Scottish Government has ever actually added it up themselves, but I think when you do that, there's sort of a tendency outside to think, okay, there's 1 billion here and there's 600 million here. But actually part of that is the same money. I think there's also examples of double counting for education and council budgets again. So I think double counting is sort of, in some sense, a lack of transparency. It makes it hard to really know actually how much money is there overall and how things are changing. I mean, we've had examples of this in the UK government, of course, in the past, although I think the examples in Scotland at the moment are probably, worse than we're seeing elsewhere in the UK at the moment in that regard. You mentioned this thing about, updates to funding within the year. And again, I think that is a bit of an issue. So I think this goes back to when the Scottish Government used to hold back a part of its budget at the start of the year for allocation later. Now, when it did that, you wouldn't want to compare the budget with the latest position, because the budget would have a lot of unallocated money in it, and therefore you'll be saying that you'll be cutting things with the full intention of topping them up later. Now that's changed. The Scottish Government allocates all the funding it thinks is available at that initial budget event. So it's no longer the case that there's money held back to allocate later. So I think the argument that now you shouldn't sort of compare to the latest position is a lot weaker than it used to be. And I think it's particularly true in a year when you've seen over £1 billion of additional funding found for 22-23 than was initially expected. Rather than drawing down just a small amount of reserves, the Scottish Government has said it plans to draw down all its reserves, over £600 million to pay for things. So I do think that there's, taking that into account is really what you need to do to get a clear picture of what will this feel like on the ground. Because what matters for services is not what they were initially budgeted, it's what they've actually got. And to understand the pressures they face, you need to compare what they've actually got with the future plans. I think there's also kind of another issue with some of this stuff as well. Like the Scottish Government sometimes adjusts its figures to kind of make them more comparable over time. There's an example in local government, for example, where when they when they sort of report that increase in local government funding, they strip out some of the funding in 22, 23 to say, well, that's a one-off expense. We can't put that in the figures. But they're not also adjusting for new responsibilities in 23, 24. So if you're going to make adjustments, I think you need to be not just transparent, but if you like, consistent and systematic, so that you're not kind of just, if you like, changing the figures in a way that sort of benefits you, but not making the changes that might go in the other direction. And I will come to this point that you raised at the very start of the question, this teachers' pay one. I do think there's a bit of an issue here. Of course, until recently, the Scottish Government said, there is no money for teachers' pay. If we wanted to increase teachers' pay, we would have to cut back other budgets. Now funding has been found for teachers' pay. And if you believe BBC reports, also for other council pay, around £300 million in total. That's a substantial amount in the Scottish context. It's sort of about, 0.6, 0.7% of its overall budget. Where did that come from? Now, it could be the case that actually, yes, more money has become available than just a week or so ago when the Scottish Government said there wasn't none available. But if so, where does it come from? And if it was already available, why wasn't that, clear to us in the figures that the Scottish Government sort of published when it published its budget revision for the current year just a few weeks ago? So I do think there's a little bit of an issue around transparency across the Scottish budget. It is a complex budget. There are lots of moving parts, but I think there could be more done to make it clearer what is the latest funding position, what are the actual changes compared to what we know is being spent this year, where is there money available, is there money that could be allocated elsewhere, or is there money still to allocate? That can be made much more transparent in Scotland. And I would just point to Wales. Wales published its spring budget revision just a couple of days ago. That was much clearer on the position of where funding was, compared to the Scottish Government's publications, which were quite opaque in some ways.
I think that's a tick for Wales and a room for improvement for Scotland. Thanks, David. So we're running up against the clock, so I'm going to ask a range of questions to Tom. So there are lots of questions here, Tom. Basically want to dig in the details of some of what you covered. So let me just highlight them and then perhaps you can sort of fill us in with what we do and don't know. So the first is, how has the greater benefit generosity affected households with children in terms of their poverty rates? How do material deprivation rates compare to the rest of the UK? And I think there was one more here. And are there regional differences in Scotland in terms of disability claimant receipts? So as we don't know the answers to all of those, what do and don't we know? And more broadly, how do we expect the policy differences on the benefit side to be feeding through into welfare in Scotland?
Well, I think in terms of the question on disability, on child payments and the impact on poverty, we haven't specifically decomposed that, but given that these are really quite substantial payments, I'd be very surprised if it didn't have some effect. Although I do note with caution that just focusing on specifically on the poverty rate when you're evaluating a policy isn't always the most effective thing to do, because it's sort of an arbitrary line. It doesn't tell you if people well below the line are having their living standards improved or if people just above it are. So it's not the thing to focus on, but I'd be surprised if it weren't having some effect here. In terms of material deprivation, I'm not sure at all about within Scotland regional differences. In terms of how the situation compares to the UK, I'm not sure about the level, but one thing comparing the work we've done for Scotland with a UK wide work that was done a while ago, it does look like, quite interestingly, disability benefit recipients and disabled people are even more concentrated at the starting point in the most deprived group than they are in the rest of the UK. It's more than half of the most deprived group are disabled in Scotland, which doesn't look to be the case more broadly. So I think, the fact that means that increased disability spending is likely to be even more targeted towards the most deprived group in Scotland than perhaps it would be in other areas.
Wonderful. Sorry, David.
I was going to say just very quickly on the poverty issue. So the Scottish Government has looked at the impacts on poverty, and I think it will reduce the poverty rate by a few percentage points. Although I know Child Poverty Action Group has calculated that in order to meet the Scottish Government's sort of interim poverty target, I think, of reducing it. I think it's to 18% on an after housing cost basis by, I think, either this coming year or the year after, that it would need to increase further to £40 a week from the £25 it currently is. Now, just to add to what Tom said, one of the risks actually in increasing the current version of the child payment substantially further is there's a cliff edge in the system. Currently, you go from getting the full £25 a week to nothing when your earnings crosses over the line, that you're no longer eligible for the benefits that like universal credit and so on. That can create quite a disincentive to work and to take some additional hours. So I think if we are thinking about, further increases in the generosity of support families with children, there might need to be some thought about the design of the child payment. Can there be a way so that you don't have that cliff edge, which, as I said, there's a risk, if you like, that to sort of go further up, you end up losing this money and you end up not getting that progression, work the extra hours. So I think there could be a case to sort of think about redesigning that aspect of the child payment.
Great, thank you, David. So we've hit against our time, so we have to draw this to a close, sadly. But thank you to everyone who listened. Thank you to our three presenters, and I guess watch this space because we'll be doing more in this area in future. Thank you, everyone.